Good evening, Wizards, and welcome to episode 14 of the Crypto Wizard podcast. Now, yet again, another week moving forward, we have a phenomenal and very interesting and extremely volatile period in the market right now. So by all means, let's jump straight into coinmarketcap.com. Go and have a look at that BTC dominance right now, which is lingering at the 57% region, which has been a fairly steady incline now from the April regions of around 50 to 52%. We've seen a nice steady incline. We even peaked at around 60%, dropping down to around 55%, and now slowly inclining back towards the likes of 57%. Now, when we're looking at the market overall, we've seen some phenomenal growth over the past few weeks, the past few days, and even within the past few hours, we have seen the likes of Bitcoin explode all the way up to a peak of $9,400, almost precisely at that region. Looking at that region right now as well, the way I am going to structure this podcast is we're going to do some price analysis. We're going to be discussing a little bit more about the futures scenario. Again, we've got the futures all ongoing and folding in real time very soon as well. It's going live. We've got Operation Libra, something we covered in the prior podcast as well. And more importantly, the likes of XRP, Bitcoin mining, and just many other factors right now that could be determining what is happening in the market next. So first of all, with this BTC scenario, many people are wondering what is going on next. Is this the bull run? So there's two different ways to actually categorize a bull run. There's the bull run, which is the parabolic bull run we've seen in the likes of 2017. That for me is something I would determine as the bull run. But then you have a bull run. I know it can sound very similar and it can be very confusing, but a bull run to me is what we have seen now. A bullish phase, a bullish rally, bullish trend. That for me is a bull run. So what you're seeing right now isn't necessarily, in my opinion anyway, the actual bull run, the parabolic one that begins ripping through all-time highs and just continuously going for weeks on end. Because if that was the case, we would have been a lot higher by now anyway, especially if 2017 was anything to go by. However, what we are experiencing right now is a major bullish rally and a bull run in itself that isn't necessarily the big boy movement we saw in 2017. So we've got some phenomenal growth happening in the market overall. It's predominantly a BTC market right now. We have seen some crazy growth though, in saying that, from the likes of Litecoin at now $135. So in the prior Wizard Wednesdays, I did cover that after the $140 region, give or take, on LTC, it was looking very likely we were going to begin seeing a pullback of some sort. So now we're lingering around that $135 region, and we just have to be a bit cautious. There could be some further movements up to the likes of $150, but as of now, give or take, LTC is starting to see a nice decline following that huge significant rally we've seen over the past few days. Now, by the time this podcast reaches you, BTC may already move towards our potential correction targets of the likes of $8,000. What I'm looking at right now in the market is $10,000 actually becoming a reality very soon, and potentially even exceeding this figure as we continue this rally that we have right now. However, in saying that, I will jump straight to the likes of this JP Morgan article I've just been reading. It just came out today. It's regarding the importance of Bitcoin futures, and it's saying how the futures have actually been understated. So the report shows that according to Bitwise, and again, this is coming from the asset management of cryptocurrency Bitwise, they're basically saying, and this also includes the Blockchain Transparency Institute, forgot to mention that, they are saying that only around 5% of the reported trading volume in May of $725 billion in the crypto market is genuine, suggesting that only around 36 billion is actually legit in trading volume. Because as many of you know, CoinMarketCap is obviously aiding a lot of this as well. There is a lot of whitewash trading, bot trading, and artificial volume being shown on exchanges so they can rank higher on CoinMarketCap. As you know, CoinMarketCap has a phenomenal influence on the market, and realistically, if they were to alter any form of statistic on their website, it's more likely than not it's going to actually impact the market in terms of price, volatility, and even fundamental news as well. So when you're putting this statistic into consideration, and then you consider that around 12 billion of this volume actually came from CME and CBOE futures, you actually realize that the majority of this trading volume you're seeing on a month by month basis is actually being dominated by the likes of Bitcoin futures. And again, this is no surprise. I cover this in almost every podcast now. CME futures, CBOE futures. We've seen the impact of what's happened since these futures went live. And again, besides the usual arbitrage opportunities that are available, futures are allowing many of these institutions to actually short the market and gain more of a short exposure in the market versus just buying. There is a massive misconception between the majority of the crypto community that these investors only want to buy crypto continuously. And again, as an institution, jumping on board at such a high price of around $10,000 just isn't really making too much sense. And again, if you were to buy at these kind of prices, even if it was with billions of dollars, I don't really understand why they would do so, knowing there is still a bit of downside room to be met. Once prices, especially in a crypto market like ours, which is so volatile on a consistent and daily basis, when you know price can very easily move several hundreds to thousands of dollars in a given day or week, it's very easy to understand that these manipulations can occur on a mass scale for these institutions to drive prices down a little bit lower than what many people would anticipate. But going over this overall, where do I actually see the crypto market going right now? And again, I'm actually using a lot of my analysis based off the likes of futures. I'm literally doing the research in terms of volume and stuff, seeing how these futures are being traded, seeing where these expiration dates are happening, and just seeing what price is doing around many of these key fundamental and technical factors. I'm now combining a lot of this into my technical analysis. That's why we've had such a successful streak over the past few weeks in terms of calls, because I'm trying to trade in line with the futures, because at the end of the day, seeing as we are here to identify where manipulation can occur, and again, by adjusting to synchronization of the market overall and the overall bias, if the CME futures and CBOE futures are in fact controlling the market, then by all means our concentration and focus must be diverted towards the likes of these futures. So in saying that, right now I have a very strong feeling, and there's a very big region of caution on my radar for BTC, and that is the likes of 8,500 dipping down to around $8,400. I believe by the end of this week to next week, very early, there should be a retracement back down to the likes of $8,400, and this could even exceed expectations slightly and dip into the likes of 8,300s. But overall, what I'm starting to anticipate here is a nice healthy pullback towards these regions, give or take, and then this could lead to a nice steady rally towards the $10,000 region. So many people are asking me, a great point was made, what do you define as a bull run? And that's exactly it. I do believe this bull run that we currently have will continue. We are going to see many pullbacks along the way, and I think it's very important that these regions are covered, because many people fail to actually cover that you will be seeing swings of several $100s to even thousands of dollars as you continue moving higher, even in a bull market. So it's very important to take these levels into consideration. And for me right now, following this huge surge we have literally just seen from the likes of BTC, I do believe a healthy pullback to 8,400 would not only confirm some of the broken ground we've just seen, but it would also validate what could be a potential move back up to the upside. So what I'm really focusing on right now, my main key levels right now would actually be $8,400. From there, I do believe we would be seeing that pullback nice and steady towards the likes of $10,000 precisely, and then dipping a little bit further to around $10,500. So all we have to do right now, it's very important to be moving in synchronization with the market. The way the market's moving right now, it's not as easy to simply just call a simple bias and let the market unfold in your favor, because it's consistently changing on a daily basis. And even on an hourly basis, as you may have just seen in the Telegram, we had BXRP showing phenomenal signs of holding those certain regions. So even though we did hit our stated regions, I did say it's not really wise to be considering entering a trade of any sort whatsoever until we see further clarity on what this market may be strategizing to do. XRP spiked straight towards a potential short opportunity region, and it did pull back, so let's just say from 0.44 down to the likes of 0.43. Could have been a great little intraday scalp, but it's really not worth taking that risk, because looking at how it's aligning now, we do have a key trend line it's bouncing on, and we do have some upside regions of around 45 cents all the way up to the likes of 48 cents. So it's a very sticky situation in the market to be trying to go on one bias and just sitting back patiently, because unfortunately the market is presenting signs where it is going to do some very erratic movements on a pretty much given basis at any moment in time. So BTC for me is the main focus, seeing as it is currently a Bitcoin market, and then you have the likes of the altcoins slowly bleeding behind. You're having a few surges here or there, but BTC is really dominating the game, especially in terms of yearly highs, currently at around $9,100. All we need now is a slight pullback in BTC. So let's say we do see that correction. Worst case scenario, it dips down to the likes of 8,200 all the way down to even 7,900. That's very likely going to be a huge region and a meltdown caused by profit taking. Again, you have to remember, many people who are now at the all-time high mark, they will be panicking yet again every time you hit a new all-time high. A pullback does occur because people want to take profits. They do not want to take their chances in terms of holding out. You have the greedy, and then you have the successful investors. And again, I've mentioned this before, there's a very big difference between realized and unrealized. And the majority of this market only ever fluctuates on a basis of unrealized profit and losses. They never actually manage to realize their wins. And the only time they ever see a realization is when it comes to losses, when they're either liquidated, margin called, or they've had to close out in a pretty drastic loss. When it comes to institutions and professional investors, they are more inclined to actually take profits to manipulate the market, especially when moving mass amounts of crypto. So when breaking a new all-time high, it's always rational for any person to really be taking some form of profits or even counteracting longs with shorts, or for example yearly lows, you would counteract it with the opposing direction. That's because when a new key level like this is broken, or a major barrier, support or resistance, whatever it may be, it's always in your best interest to just extract and just take out, just saturate some form of profit from the market, and then let the market correct, test some new ground before it continues moving in your overall favored direction. So that's how I'm really feeling about BTC right now. It's a very fine line, especially going on a weekly candle basis. We do need to really await the weekly candle closure to dictate where price could be going next, because there's been all forms and all kinds of insanity right now in the market, where many people are trying to compare prior price action, etc., to what could be occurring in the market. But for me right now, this is looking like a very individual case-by-case scenario. There isn't much price action prior that really justifies what we're seeing in the market right now. So do not try to use too much historical price action, because we are seeing a very different movement, a very different market dynamic to what we've seen normally. We are slowly but surely, and actually it's probably more healthy to be moving this way, where we are breaking those highs, slowly retracing back on a pullback, and then proceeding higher on those long opportunities as well. So the market overall is growing phenomenally well. And I think what's very important to note is the Google Trends again. This is why I'm more inclined now that there may be that push to $10,000, because Google Trends are a big indicator, and that shows a lot of retail capital is slowly starting to show interest once again. So again, I'm not suggesting this is going to be the bull run, but I do believe a bull run will continue to commence, especially now the retail capital is getting involved. The $10,000 region is a very key psychological level where I can only presume a huge amount of retail investors will jump on board once they start seeing that number near, because that's when FOMO really does begin to kick in. Whereas when it actually starts nearing that region, and then you start considering the market has already been pumped, and again, we have the futures coming out very soon, guys. We have the futures coming out. We have the Binance US ban. I know they are partnering with another company to, of course, provide a service to the US customers and the US client base. But with all of this news coming out, and again, knowing that there is a huge amount of short exposure, and the fact that futures dominates the majority of the market, it does make perfect sense that for an entirely new market of futures to be jumping on board, there is going to be some form of significant pullback, even if it is to the likes of $8,000, $7,000, $6,000. We have to be prepared, because when these events come out, they normally work in the opposite of what you actually anticipate them to be unfolding for. So again, CME futures, perfect example. December the 17th, 2017, the world was going crazy. The forums, Reddit, YouTube, there was all those YouTubers, there were the gamers that have turned YouTubers, they were going crazy. All of those clickbait thumbnails and titles, they were enticing everyone to jump on board before the institutions jumped in. But many people forgot to realize these institutions have further plans versus simply just buying. It's not profitable, and although they do have the opportunity to simply buy and pump the market higher, the more you're going to start seeing further futures being implemented, different platforms allowing futures, different companies, different corporations, different financial institutions. It's only going to create a stronger war between the institutions as further capital begins flooding the market. It's not going to be as easy as everyone buying, because there's going to be competition, and that's when there will be much more liquidity and much further breakouts in specific directions. So the main purpose of this podcast is yet again to inform you guys: sit patient, sit tight, follow the market, do not be afraid to improvise and adapt and move in synchronization with what you're seeing on the charts. This is not one of those markets where you can simply sit back and just call directions and let it unfold in real time. The market must come to you in these certain opportunities, and especially when it comes to trading in these very specific scenarios right now, one of the wisest things you could be doing as a retail trader and as a hopeful professional trader is sitting back, predetermining and preempting very specific certain levels, as I've been doing in the Telegram, awaiting those levels to be met and get manipulated to. Again, we've got crucial wick fishing regions, we've got all forms of different regions circulating in the market. It's very easy to jump on board when you see the green candles, because when it is in a bull market, it's very likely it will even break out, if you bought at resistance, to move in your favor. But just because it's in that current market scenario, it does not mean you take such an additional risk. You still must be trading as cautious as you would in a range bound market or in a bearish market. So overall, just take it very simple, take it very cautious, approach the markets with caution. There'll be an update later on this evening as well, around 1 a.m. once the weekly candle closes. I will try and get a market analysis video broken down for you all as well, because right now, every single week, we are seeing critical periods in the market where, if I just go to that weekly time frame right now, it's been 3 weeks around the $8,800 region. We've now broken above to $9,400, but we are still range bound within that certain region. So there has been a breakout, but for all we know, if that weekly candle closes back below, it's yet again been another wick fishing region. So all you could be expecting from there is a very large pullback in the market and a very huge correction if you were to continue seeing that region being failed to be broken. So when you're looking on a weekly perspective, it can be very easy to look at daily candles or 4-hour candles, watch and break a key level of resistance or support, only to see the weekly candle a few days later or by the end of the week actually close back within that range bound region. When prices do that, especially on a weekly perspective, that's why we are focusing so much on the weekly. You can highly anticipate what could be a major turning point or a continuation in the market. So by all means necessary, we are not here to FOMO. We are here to accept the fundamental news that's going on right now. We've just found out that the majority, even 5% of crypto trading volume, is only legitimate compared to the hundreds of billions that is allegedly being traded and shown on exchanges. We have also Coinbase, key thing to mention as well. Coinbase as well, they're aiming for a 2 billion milestone. Again, they had a $10 million bet that they'll bring around 10 billion. That's their master plan of Wall Street money into Bitcoin and crypto. And they've just hit a major milestone. They now have 1.3 billion in assets under custody already in the Coinbase custody. And they're saying it won't be long until that number jumps to the likes of $2 billion. Now, the only way that number is really going to start increasing higher is during either a parabolic bull run or as price gets manipulated lower, so these smart institutions and Wall Streets can just get those slightly more efficient purchases in. So overall right now, we're in a point in time in the market where it's a very critical region of make or break yet again. What we're focusing on right now is the likes of $10,000 being met at some point, but we cannot really allocate that target until we see the likes of potentially $8,400 being broken. It's right now a 50-50. That's why I'm not really trying to be giving any long or short calls right now until we see that region come through. So the best way to really play this out right now is not really be involved in any trades. If you took a long position off the region I gave yesterday, I'm not even sure what price that was exactly now, but I know you should be up several $100s on BTC in terms of pips in particular. So if we're talking pips, you should be around 400, 500, even 600 pips up off the call I gave yesterday. So stop losses in profit. As always, don't forget to take some profits and saturate those profits and milk those profits out the market every single time an opportunity you have available to do so. The reason being is we're at a very erratic period right now, and if the market just suddenly slams or pulls back against you, you have wasted a very beautiful opportunity in the market where a lot of money has potentially been made, or a very substantial amount compared to what you would normally make, thanks to the likes of this move. So just take it slow, take it easy, be cautious, and I'll be back later on this evening or very early on in the morning around 1 a.m. to provide a market update on this exact scenario as well.